I'm going to start off today's lecture, which is the third lecture in our series on international tax planning, by discussing with you briefly the issue around tax radar. Remember, I sent you all an email suggesting to you that you take a look at the website www.tax-radar.com. What you will see on the screen in front of you is that particular website that I wanted to introduce you to. This website contains a summary of all of the information that you are required to take a look at when it comes to implementing a tax risk management program for clients. Now, part and parcel of what we are teaching you in this course is not just an introduction to the whole concept of international tax planning, but also from a practical point of view, how you take that information and apply it in practice to assist your clients, not only in a planning position, but also often your starting point is to look at existing positions that your clients are in. And by taking a look at the existing position that your client is in, you are then placed in a situation where you can identify any risks that they have in respect of what they've done on their international tax planning in the first place. And secondly, once you've conquered that particular aspect of looking at what their current situation is, you will then be in a position to look at what improvements can be effected. Now, we're going to be looking at the whole process of tax risk management in the last two lectures in the series of lectures that I'm presenting. But in leading up to that, because there's an enormous amount of information, and I normally take 6 weeks of lectures to go through some of that information, I really want you to please familiarize yourselves with the Tax Radar site. By now, you should have been given an username and a password to access the site, because the site is only available to people given access on that basis. It's not open to the public. And as with any website, the best thing for you to do to familiarize yourself with this website is obviously to start on the first page. And if you scroll down, you will see that the page refers to 4 modules that need to be worked through. My suggestion is, once you have the password and your username, you go into each of these modules. The modules contain, on the left-hand side, a number of supporting documentation, which is relevant to the main module. A lot of this documentation will help you formulating your own tax risk management process or plan. Obviously, you are more than welcome to associate yourself with the work that has already been done on this one, in terms of utilizing this template as a basis for you approaching your client base to help them determine what their tax risk management exposure is on international tax issues. Just by way of example, let's take a look at Module 1, and you'll see that it gives you an overview of what the process is all about. It then suggests that you go through various steps. Obviously, with any engagement, the completion of a retainer agreement, the completion of mandate documents. I don't want to spend any time on that. Then, very importantly, the completion of the Tax Radar Tax Risk Questionnaire via a process that we've set it out in the form of a survey or a poll. So if you click onto that link, what it will do is it's going to take you to a series of questions. So if you take a look at the survey, you'll see that there are 7 parts to it, and you obviously, it'll go through in layers, and it gives you an estimated amount of time, how long it'll take you to complete it. Of course, there's general information pertaining to your taxpayer client, in terms of the industry they're in, the SIC industry code, and then of course we get into the guts of it, where there are then key questions that are asked about the very business of the taxpayer concerned, and based on the answers given to these questions, we are then placed in a position to a point to to determine what their tax risk is. For instance, let us just take a look at some of the key questions which do not just highlight international tax problems but overall tax problems that might be facing this particular client of yours, which will put you in a position where you need to maybe look a little bit more carefully at what their current status is. The first question is a transactional question. Have you made any material acquisitions, dispositions, or mergers in the last 5 years? Our experience is that when you've entered into any such a material transaction, you will often find that there are tax exposures. So if the answer to that question is yes, key questions are then asked. Where are the agreements? Was there an installment sale attached to the transactions? Were the transactions properly treated for tax? Now, most people might simply just say yes, but one should reflect on this question. When you say properly treated for tax, were, for instance, pre-transaction opinions obtained? Were those opinions checked against the transaction once it was bedded down? And the question is then asked, has the above been double-checked? And often the answer to that question is no, which immediately red flags that this is possibly a transaction which just needs to be taken a look at again to make sure that everything has run smoothly. Then, secondly, have you entered into any material financing transactions in the last 5 years? So you can see that it's a fairly comprehensive series of questions, as I said, divided into 7 parts, and that just gives you a little bit of insight into what this is about. And as I suggested to you, you need to just work through the website, and that will then put you in a position to understand a lot more about the tax risk management process, which is something that you can use to assist your clients and at the same time to also generate potential work for yourself in terms of planning their affairs going forward. That's all on the introduction to TaxRadar. I will continue with the balance of the lecture in the next